tells you what those details are, but that activity is not in your QuickBooks, and we made those adjustments, and part of our adjusting journal entries are to book those receivables and payables. But in a perfect world, you should have that posted at least annually, maybe even quarterly, in your QuickBooks, so you can track that activity throughout the year. Yeah, we can help you with that. Okay. Item 3, we talk about the bank reconciliation and review process. So I'm often asked, what's one of the most basic things we can do to make sure that we're properly monitoring the activity? And it's as simple as having somebody that outside of the person who you rely on to post the daily activity in the QuickBooks review the bank statements and reconciliations on a monthly basis. So you do place a lot of reliance on your secretary to make deposits, post those deposits, enter the bills, print the checks, and obviously you have other people sign those checks. But that being said, it's important when you get that bank statement and have that reconciliation prepared that somebody other than the person who is doing all the activity spend a little bit of time with that on a monthly basis just to review that activity. And I think we spoke about that a few times. Okay, and then so aside from that, you also had a state liquid fuels auditor have a couple issues related to 2017 activity that occurred in 2018. And that's kind of like an ongoing process because they haven't issued a final report yet. And I don't anticipate that they would do that until sometime in early 2019. But the first one related to not having the proper approval for an application on a project on Ely Road that totaled about $91,000 of expenses. And the second one relates to the process of making purchases for stone of about $39,000 out of the State Liquid Fuels Fund, and those occurred throughout the year. So as a total, they exceeded the amount that bid should have occurred on those. So the township is awaiting a final report from the State Liquid Fuels Fund, and they may require you to transfer that money from the general fund back to the State Liquid Fuels Fund. So it wouldn't necessarily be any repayment that would go back to the state because it's basically your funds, but they have some real specific requirements of how to use those funds. And there's a couple instances there where they identified that wasn't occurring, and that needs to be corrected for both 2017 and then going forward. So also, just pointing out on number 5 related to some prior period adjustments related to the DCD report. So last year you had another firm, Cipher & Cipher, do the 2016 audit of financial statements, but prior to that, there was the DCD report was already submitted. So they did the 2017 financial audit, but there wasn't an adjustment of the DCD report, so we needed to make some of these adjustments related to 2016 to match the DCD report that we intend to file that mirrors this 2017 audit. So that's kind of summarizing some of those differences. And one of the main differences is to how they reported the escrow account activity, and that's also identified in number 6. And the reason I think that's important is because throughout the year, as that money is coming in, it's being shown in your QuickBooks and your accounting software as revenue, when really that's somebody else's money. Yeah, so it needs to be shown as a liability, and we talked about how setting that up as a liability and tracking that number, and you should be able to utilize that on a regular basis, on a daily basis, to say, okay, how much money is outstanding owed to other people, and also when you're taking a look, if you get periodic reports throughout the year of what your revenues and expenses are. In some regards, that your revenue was being overstated because it was, showing those money coming in, and it's purely a cash receipts, but it's not your money. So we talked about showing that in a different manner and being able to track that liability. So going forward, there shouldn't be a problem. And lastly, this is a communication that I make for most of all my audit clients.
One question.
Yeah.
With that money being put in there like that, wouldn't that have overstated our balance?
It wouldn't have overstated the cash balance.
Yeah.
Because it was properly recognized as cash, but instead of it shown as a liability side, it was shown as revenue. So
that's what I'm saying. Wouldn't it have showed too much?
It would have overinflated our budget, the amount of money we had available.
Yes.
Yeah.
Yeah. Yeah, but it's corrected in this report. We made the adjustments to correct it.
Right, but at that point, it was overinflated and
Yeah,
numbers.
Your budget to actual was kind of misleading from that standpoint throughout the year because of the way that was being reported.
Okay.
Yeah. Okay, so this last item under organizational structure, look, you have to rely on one or two individuals to do a lot of different things. And in a perfect world, you have multiple people doing different functions. But it's not cost effective to have multiple people doing that. In a small municipality like this, it's very common to have one individual that does all the things that I mentioned earlier. But what you do is you do what's necessary to kind of mitigate that. And some supervisors providing daily monitoring and review of operations is one step to mitigate it, but also requiring multiple check sign-ons on checks is another way to mitigate that. But overall, the comment is made to make sure that the board is aware of the fact that there needs to be oversight. Part of their role is to provide the necessary oversight of the operations. So the remaining part of this report is just basically some required communications, and I'll just highlight a few things. Like, for instance, on the middle of the page 5, we talk about what some of the key disclosures are. The most significant disclosure, most sensitive disclosure is your long-term debt and pension funds. That makes up the bulk of your most of the financial statements. We state that we encounter no significant difficulties in dealing with management. We also state that we have some adjusting entries which we've attached to this report. And basically, these 2 pages on the back are the entries we needed to make to get your financial statements from QuickBooks to a point where it's presented properly, and then we're able to provide a clean audit report on that. And really, a lot of this activity relates to what we talked about, the water and sewage fund being shown on a cash basis, but for our purposes, we have to show it on an accrual basis, and also that escrow liability. And in some respects, some of these entries are just moving it from one expense category to another, so it properly hits the DCD report. So there weren't a whole lot of significant items other than that escrow liability adjustment that I mentioned, and we talked about that. So we have what's called a management representation letter, which at the conclusion of this, I'll have to have you review and sign as a board, and and that's basically saying you've given us the information we requested for our audit. Other than that, that's basically the audit and the financial statements.
Question. So we're going to do a budget for 2019. Should we do a separate budget for the Act 13?
Yeah.
I mean, there's only ever been one. Shouldn't it be 2 budgets?
It really should be 3 budgets, if you ask me. It should be state liquid fuels, it should be Act 13, it should be general fund. And basically in the past, you've always, and even presented in this audit, you include your Act 13 in your general fund, which is okay to do, but it would be a recommendation that I would make to kind of separate those, because the Act 13 money, even though there's some questions about how broad of use that there are there, because there isn't a whole lot of guidance about how to utilize that funding. But it's really intended for these capital items. You want to be able to operate your activity in the general fund and have your Act 13 funding for, and make decisions as a board. Do we utilize, how much of that Act 13 we utilize each year? Do we let it ride and accumulate so we have a bigger project in mind down the road? So you want to be able to create a budget that's balanced for your general fund. And basically you're at 12/31/17, your general fund was puffed up by the fact that you had a good bit of money in the Act 13 fund, because of that, of your total general fund number, let's see if I can get to it real quick, of $473,000, $408,000 of that is Act 13 money. Yeah. So basically you had $65,000, in the general fund at the end of 2017. So, and then when you start talking about what's too tight, that's too tight, So yeah.
Yeah, we noticed.
Well, Gary, if I'm correct, the PUC has a funding, has a form for that budgeting aspect.
Yes.
I mean, they should be doing that every year, because it's not general fund money, but you should just, if you guys go to the PUC website, there's a format that you use, a form, And you can also get, I know some other places that represent, if you don't use that, who's it, the Attorney, Auditor General, Pasquale, whatever his name is. You come in, he cited one of the places because they didn't use the form, so.
Okay. Yeah, I mean, and another step that we talked about was, like, your QuickBooks right now has one fund, okay? So, I mean, it's a combination of everything. It's a combination of general fund, state liquid fuels fund, sewer and water fund, you know, and it's tough for you to be able to get the reports you need to make decisions out of that, okay? So, part of the process we talked about was at the conclusion of this audit, what the way we were able to do the audit work is we separated those through 12/31/17 for our purposes. We can give you a good starting point at 1/1/18, you know, of those separate funds. Now granted, you already have all the activity of 2018 in there, but it wouldn't be hard to help you separate that some more. Guys, in?
Sharon is excited, she says, I will stay
Yeah.
and refix, you know what I mean,
Yeah.
yeah, she says, yeah.
Because what I want the board to be able to get as a tool is you should be able to have a balance sheet and P&L, budget to actual general fund. That's your most important tool. That's your, throughout the year, being able to monitor the progress of the revenues that you collect and the expenses. You know, with that variance budget to actual. You know, and then you have a separate budget for the state liquid fuels fund. You know, you get $250,000 or whatever it is for the state liquid fuels fund, and decide how much of that, you know, from a budgeting standpoint that you're going to utilize. Typically, you utilize the majority of it, you know, but there's still, at the end of the year, maybe $50,000 or so in the bank related to the state liquid fuels fund. And then, you know, then you have your Act 13 as a separate budget, and a separate company in QuickBooks where you have a balance sheet and P&L, and then you make the decisions as a board how to use that fund, whether or not to utilize it all for specific projects, or let it ride and push it into the next year. So that's one thing that I promised that I would, once we get this done, and we're, you know, this is the final step. Once we get, we can help you get that in place for 2018. Okay.
I have a question.
Sure.
And I've been around here a long, long time. I'm the old man here. I 100% agree with budgeting the Act 13. But how do you have an accurate estimate of how much money is going to come in June or July of Act 13? You don't have a clue.
Well,
I don't have a clue because they tell you they don't expect as much this year. And then you got Harrisburg's got their arms out after it.
yeah.
We didn't know within $100,000 what we were gonna have.
Yeah, I mean, I get that to some
If you
degree.
know that, if you'd share that with us, that'd be great.
Well, I think from a historical standpoint, if you could track where you were the last 5 years or so, I think the $100,000 might have been on the low side.
Oh, it was definitely one of those signs, that was on purpose.
Yeah,
That was intentional, because we knew it was gonna be cut, supposed to be cut,
yeah.
and what the rumors that we heard.
Well, fortunately, it wasn't cut as
And-
much.
no, it wasn't,
every year
it
as
wasn't,
much as
but-
what- Yeah,
But we only have, what, maybe 5 years of experience with it.
yeah. I mean, that's why that budget, that's why I think it's keenly important to separate that from the general fund, because the impact of that number is not as significant if it is separated. So like.
And I don't have any problem with that, but if you got a clue to how we can,
Well,
how much money's
I don't have
coming.
any secrets, I don't. I mean,
I would welcome that.
yeah, I really don't have any special knowledge about that at all, other than, like I said, you know, from my perspective, when you have one budget combining the Act 13 and the general fund, it makes it that.
Well, it's
much-
gonna distort it, I understand
Yeah,
that.
so I think by separating those, you kind of isolate that Act 13, and if you miss the mark on it, you know, if you say, okay, based on 16 and 17, and what was the number for 18, I don't know. 'Cause that's,
366? Yeah, 366.
okay, so it was very similar to 17 then.
Yeah.
So you say, okay, the last 3 years, we were 388, 364, 366, let's be conservative and budget 3 1/4, you know, and something like that, and you say, okay, well, but if you miss the mark on that, it's not as significant, because you're not using that to help you balance the general.
That's for unknown,
Yeah,
the rest of that you can plug in.
yeah,
No, we went to a budget training, Sharon and I did, and they talked about, as we go through the year, to look at that budget, and when things become too far, one way or the other, they said, especially if you go 25%, like if it's off, to,
rebudget,
yeah, to redo
Yeah.
that.
I definitely would recommend that, yeah.
Okay, they gave me a guy's name to call to get, there's a resolution to do part of.
Transfer.
Yes.
We do that over in Camp Township.
Okay, 'cause
Just
that's
call-
what-
Just call Stephanie.
Yeah, but I know that they made that,
Can't do
you know,
that
they said
for
if you're,
Yeah, but
it's
she's
way
not
out, you
doing it.
need
Oh,
to.
fine, you want
And again,
to.
we had trouble because we don't have all these reports
Yeah,
to see.
so I think going
Okay.
forward in 19, now's the perfect time to start thinking about that, right? I mean, maybe it's, you get a little late in the game to think about it, but, you know, you still have
Little
time.
and everything.
Yeah, yeah.
Okay.
Long learning curve.
I had a couple of questions. One, some of that debt for the water is really old.
Yeah.
I know you're not a banker, but would it be, I know when I was on the school board, we refunded things all the time and got cash out and, you know what I
You're
mean?
talking about
Yeah.
refinancing?
Yeah,
Yeah, I mean, when you take a look at that though, you have a really good rate on,
Is that Penn Best?
yeah, on the
You
pen.
can't, 1 or 2%.
You got 1%, you don't gotta touch that, right?
No, but we could touch the one in Claysville.
What's Claysville?
Claysville's is 2.9.
And the other one left over in water is 5%, which that's high.
yeah.
Yeah,
One community bank's not that old, maybe 3 years.
Rates are what right now, 3%?
yeah, you might be, you know, you can do an evaluation of that to see, and it doesn't hurt to have a
It's
discussion.
not gonna hurt to
with
ask.
somebody.
Yeah.
What you can do is contact a couple banks, like Community Bank, see, just say, here's what we have. See, Community Bank,
Washington Financial.
Washington.
That one, the community bank, we used to have a West Bank out, and it expired, and in fact, Tammy could tell us, it was expired for a couple of years, and we were just riding, you know, we hadn't paid on that, when we didn't pay on that loan at all until
Yeah,
about 3 years ago.
yeah, you kind
4 years
of, well,
ago.
you inherited, the one that's 5%, you inherited.
And we made nothing but interest payments on that one loan until about 3 or 4 years ago,
Yeah,
What's the?
from the beginning.
what's the
but
total
of course, that has the lowest of the balance.
300-something thousand, yeah.
There's only $65,000 outstanding, and that was,
Yeah.
that 65,000 was 12/31/17, so you probably already made both of those, maybe you made 2 of those semi-annual payments, so that might be down over less than $50,000, around 50, yeah.
Mhm.
But still, I mean, you know, it doesn't hurt to take a look at that and, you might save a little bit. Like, for instance, if you look on page 22, over the course of those loans, you're paying $131,000 of interest.
It don't hurt to shop those,
Yeah.
anything, I mean, they're all,
Yeah,
One of them notes I read said something about FDIC insurance. Are we keeping all the money in the same place? Is that not good? Is that what that was pointing out?
it wasn't specific, it's just a requirement that we're supposed to,
Yeah.
we're required to identify how much of your funds are held, or covered by FDIC insurance. Although, for municipalities, banks collateralize that above FDIC insurance, but they
Okay.
group it all together, you know, they're required to do that, so. That
Because that would be our luck, you know, the banks would crash the day after the F-13 money goes in or
I
something.
get that. I mean, you know, but, you know, those banks, whenever you have a public account, they pool all of the municipal accounts that they have, and they have money that's pledged against that, as collateral against it, which is above FDIC insurance.
My last question was, the lady from the state recommended forensic audit, and I know you were kind of tipped off to that, and do you have a recommendation?
I can tell you that there hasn't been anything that I've identified during the course of my audit that would require a forensic audit.
Good.
Any other questions?
I'm gonna ask you the same thing I asked Cypher when they were here. Any missing money?
No,
Any misappropriation?
no,
Thank you.
none more, thank you.
All right. Thank you.
I appreciate it. And,
Yep.
if I can help you out, maybe I'll let you know.
Thanks, Gary.
Okay.
And then you'll get a final,
We'll
right?
get a final, we'll get the DCD report, we'll
Okay.
bring it all out here in a nice box that you know, and, you have to electronically submit the DCD report, you know, and that'll get submitted, you'll get an acknowledgement. We have an advertisement that has to go in the newspaper, we have a couple other you know, things to tidy some things up here, but we'll do that this year.
You said that the fund balance only needs to be 25% of the,
I didn't say that.
No.
I said that's, you know, there's different rules of thumbs that.
well, because
people
it's
use.
different at the school.
Yeah.
Yeah.
In the old days, it was 6 to 8%, what they said, the old days. But let me ask you a question, now, tonight, we have this audit in front of us. Now, we have to make some type of motion, either to this, either today or next meeting.
It would be, yeah, it would be, the auditor presented the audit in draft form, you make a motion to accept the audit, and then we issue the audit.
So basically, should we make a motion to accept and advertise the same?
Yes.
Is that what you?
Somebody want to make it?
Well, I will make a motion then that we accept and advertise.
The same.
I'll second it.
All right, got a motion and a second. How do you vote?
Kathy,
Yes.
Mike,
Yep.
I vote yes, Doug,
Yes.
Ed.
Yep.
As far as I know, and I've been involved in this township government since about 1985, your firm has been the first DECD, oh, whatever it is, audit. I don't know that we've ever had a
Is that right?
professional audit, ever, have we? We had two of the former secretaries back here. We ever had a professional audit other than,
Last year you had Cypress.
well, that wasn't for the,
Well, not for the DCD.
Yeah.
Yeah,
Kathy? I don't think we ever had. Tammy? I think you guys are the first, so you know. It ain't a big deal, but
yeah.
it's,
I'll take it for what it is. All right.
it was very thorough, thank you.
Thank you. All right, have a nice evening.
Thanks,
Thank
you
you.
too. Thank you.
Can you find your way out of this township?
I can get out of this.
It's right there. We don't want you falling out there.
Okay.
There you go.
Thank you.
All right, do we have need of an executive session?
I move we adjourn. Unless you have to have public comment.
Public comment
No, he's not.
on,
We had that last meeting.
did we do on non-agenda items?
You already had probably just.
Did we?
Yeah,
That was
You're not
agenda.
required, if you have a team, you're not required to have public comment again,
Okay.
okay?
Okay.
That's the sunshine access.
All right, we got a motion to adjourn.
I second it.
How do you vote?
Kathy,
Yes.
Mike,
Yes. I was gonna say
yes,
no.
Doug,
Yeah.
Ed.
It's only 5 to 8, no.
You can stay as long as you want.
Never quit easy.